The new year is here, so let's talk about the outlook for the economy and the commercial real estate industry with NAREIT economist Calvin Schnure. Calvin, thank you for joining us.
My pleasure.
Calvin, let's start off by talking about economic fundamentals. I know that there's been a lot of discussion about the economy potentially losing steam, but it seems like the focus is now shifted to the Trump administration and what kind of economic policies we might see implemented. What are your thoughts?
Alan, the economy will probably do just fine in 2017. Last year, there were a lot of worries about whether the economy would run out of steam, and those are really pretty much overblown. Economic expansions don't die of old age. They end when either the economy overheats or gets overbuilt. Overbuilding could be things like home construction, commercial construction, resulting in too many buildings for what the economy needs. We're not seeing any signs of that. Overheating would be if you have price inflation, wages pushing prices up, if you had industrial capacity constraints causing goods prices to rise. We're not seeing any signs of that either. So fundamentally, I would expect this economic cycle to continue for quite a while.
And what about potential changes that the new administration might have for the economy?
Well, it's actually too early to tell just what policies are going to be enacted and how much of an impact they'll have on the economy. Well, one thing that's been discussed quite a bit is if there's additional spending on infrastructure. If that happens, if that takes place, it will generally be good for output, for jobs, for the fundamentals for commercial real estate, but it's not likely to cause a wholesale shift in the direction for the U.S. economy.
Let's shift to maybe some hurdles ahead. How do you feel about rising construction activity?
One should always keep an eye on construction activity, but it's still too early to be worried about getting overbuilt. Construction trends are much stronger for nearly every property type. They've risen quite a bit over the past several years, but overall construction activity is still well below previous cyclical peaks. In fact, if you look in terms of the actual construction dollars spent, inflation-adjusted dollars spent, they're still where they were 20 years ago, even though the economy is 60% bigger. So we're not seeing any signs that the overall economy is overbuilt in a way that would cause saturation in the markets. Now, any given neighborhood, any given property type may take some time to absorb new construction. We're seeing that with the luxury high-end apartment market in several cities right now, but the fundamentals are really strong enough to support this over the broader time period.
And what about your outlook for commercial property pricing, especially now that the Federal Reserve seems intent on raising short-term interest rates?
Property prices are actually very well supported by economic fundamentals. One example is the occupancy rate in commercial properties owned by REITs reached a record high in the third quarter. With continued strong demand and moderate supply pipelines, we expect to continue to see firm markets, which is going to give rent growth. It's going to give property prices a firm basis as we go forward. Rising interest rates certainly could put some pressure on cap rates, but it's important to keep in mind that what matters as an investor is how much reward you get for holding commercial real estate. And you measure that by the spread between the cap rate and treasury yields or interest yields. And that spread is very wide right now. So even as interest rates move up, commercial property prices have quite a bit of cushion to absorb higher interest. And we shouldn't lose sight of the fact that even though investors do tend to get anxious when the Fed changes direction, during periods of economic expansion, when you have growing demand for commercial real estate, and that gives rise to some higher interest rates, REITs and commercial real estate have typically performed quite well during those periods.
So it sounds like you're pretty optimistic about REITs and real estate.
Yes, I think there are lots of reasons to be optimistic for the year ahead. With solid economic fundamentals, we're probably going to see continued demand for commercial real estate, and that's going to support rents, it's going to support property prices, it should support the markets in the year ahead.
Thanks so much for your time, Calvin.
My pleasure.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.